Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A seventh bullish white soldier on Friday, and almost, though not quite as yet, filling in the changeover gap that reaches up to the 120-160 area. The market nevertheless continued its moves up through the important overhead heavy-duty resistance between 115.70 to 120 even, breaching the high but closing back below with only just the May 2012 high at 120 even. Overall, the market continues to move away from two descending triangle patterns formed since March. Potential targets on the upside for these recent previously mentioned descending triangles, as well as the double-stroke triple bottoms formed over the same period, are as follows. For the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a primary target X3 in the 120.5 area, with a harder to get secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Okay, I hope you've got all that. So far, we've reached the primary target X3 in the 120.5 area for the smaller March to April descending triangle. Now, so far today, a gapping higher open since filled in, which has reached up and filled in the changeover gap. We're now in fairly free territory above, stretching up to the April 2012 high at 125.96, with only the lesser recent Fibonacci level at 61.8 Fibonacci level at 122.99, and the smaller March high at 123.74 in between. However, the market has chosen to seemingly consolidate over the heavy-duty congestion between 115.70 and 120 even for now at least. Spot gold. A bearish harami on Friday that also led to the lesser relative of a weekly key reversal, and that's an outside week last week. It was in its way a summing up of the current situation and something it shares with spot silver and spot palladium. The market seems captured between a slowly rising long moving average below, currently 1842, and the overhead 50% Fibonacci line in a March 21, March 22 move at 1873. Despite the action, it is still very much like watching someone treading water. A lot going on, but going nowhere, which is a little disappointing given prices recently exited outside the broken upper time, currently 1797, of the early March to late April bearish Andrews pitchfork. I really would like to tidy up this daily chart and retire this pitchfork, but as long as we maintain these unmoving actions, then I feel obliged to keep it on there. So far today, well, a slightly lower open and a very small move higher, though nothing to write home about. I'm beginning to wonder if this market is building up for a possible explosive and large move in the not too distant future. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.